Hi guys, good morning and welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. It's a Friday morning. One would say, thank God it's Friday, a week of historic reforms, given the fact that we saw the new GST regime being ushered in. Of course, two-tiered rate structure, and of course, that's some massive reforms coming in from the government side to boost consumption. Yesterday, we did start on a very good note. Came very close to that 25,000 level, but that crucial psychological level remained, elusive because we did fizzle out from the day's high and quite significantly, so to say, because the Nifty came off almost 280 points from the day's high, and the mid cap index, meanwhile, ended the day in the red. There was 1,000 point swing on the Nifty mid cap index. It came off 1,000 points from the day's high. So yes, all the euphoria related to the reform, completely fizzled out. Looks like all the good news that we have seen in recent times, like stellar GDP growth, S&P upgrade, and now the GST reform, they're being discounted by the market because all the initial euphoria is completely fading out. To understand what the setup is looking like, of course, we will be getting you a technical analysis on that, technical expert with his views and all the stocks to watch out for. But yes, looks like we are poised for weekly gain. At least, that is something that one can take heart from. The Nifty is poised to end the week higher by about 1.5%, if we end flat or we end in the positive zone today. But yes, lots to watch out for. The GIFT Nifty, as of now, is hinting at a positive start. The global cues are also fairly strong. Wall Street saw a record close. So yes, in terms of global cues, things are looking good. Stock wise, quite a few individual names will be in focus, and of course your stock related queries, we couldn't take them up yesterday, but we'll try and get them addressed today. So keep them coming in as well. But before we move any further, let's quickly take a look at the top headlines at this hour. Stocks on Wall Street rise despite a weak private sector jobs growth data in August. The S&P 500 closes at a fresh record high, while Nasdaq and Dow Jones notched significant gains ahead of the non-farm payrolls data, which could bolster hopes of a Fed rate cut. Asian markets open higher after Trump lowered Japanese auto tariffs to 15% from a previous 27%. But mind you, Trump has warned that fairly significant tariffs could be coming in on chip companies. So watch out for that. The GIFT Nifty positive, and in the pre-open, we are looking at a positive start for our markets. In the commodities market, oil prices eased to a two-week low due to a surprise build-up in US crude inventories. Meanwhile, gold prices slipped on Thursday, but nevertheless, in futures trading, gold prices crossed that $3,600 per ounce mark. Of course, watch out for precious metals going forward. And in an exclusive conversation with Network 18, Union Minister Piyush Goyal hails the latest GST reforms as the most transformative step in the last 60 years and expects revenue buoyancy to improve after GST cuts, aided by a boost in demand. He adds that India is a patient country and believes in dialogue and diplomacy amidst the tariff standoff with Trump administration. Well, those were the top stories at this hour, but quickly taking you through the market action yesterday. Of course, as I mentioned, we failed to hold on to those stellar gains, and the Nifty came off 280 points from the day's high. The mid cap index, ended in the red. Sensex slipped over 800 points from day's high. Insurance companies, they erased gains given the fact that there will be no inverted duty gains and, of course, no input tax credit as well, as a premium on life and health insurance will be exempt from GST. So yes, insurance stocks were in focus, autos were in focus. A lot of sectors were in the limelight, but some of them like IT pharma, ended the day in the red. Autos were seeing good or great gains, but they also came off significantly from the day's high. The Nifty Bank Index ended extremely flat. I know one would have thought that day before yesterday, the Nifty Bank staged a good recovery after the recent underperformance. One would have thought that there would be an extension of that, but didn't really sustain. In terms of the put call ratio, it fell sharply to 0.84 vis-a-vis 1.2 in the previous session. In terms of stocks that were in F&O ban, one stock continues to be in the futures and options ban today, and that is RBL Bank. Fund flows, foreign investors remain net sellers, but the amount was really meager yesterday. 106 crore rupees worth of stocks sold in the cash market. DI buying support continues, 2,200 crore worth of stocks bought in the cash market, but of course that also includes the Aavas, finance block deal. So all in all, that was the texture of the market yesterday. But how are things looking like for today and the coming week? Let's touch base with Raja Venkatraman of NeoTrader. Raja, lovely having you on the show. First of all, what is it that's leading to so much pessimism? Because of course, yesterday there was a lot to digest. But things really didn't sustain. One would have thought 25,000 will be cleared. It hasn't happened. Although we are above the 100-day moving average. But how is it looking like going forward? Do you think all of these bounces will continue to get sold into?
Yeah, good morning, Nandita. Thank you for inviting me to the show. And yes, the GST reforms were definitely quite refreshing. But then the kind of sell-off that we witnessed yesterday was definitely surprising. And the way everyone were geared up overnight on Wednesday for a strong move above the much touted 25,000 mark did not really happen. And that clearly spells the tone here that the overall markets are not going to be enthused by these kind of measures which are taken by the government. Yes, it is definitely an encouraging measure, and the only sector that saw some, I would say, is a strong upward traction is FMCG, which had already started seeing a strong move over the last few weeks, and yes, this only added more fuel to the uptrend. So now, barring FMCG, auto is the other sector which showed some sprite yesterday. But apart from that, many of the stocks they opened on a positive note, and just like the market tone, everyone was surprised. So what it tells us is that the market sentiment continues to remain suppressed because the global cues are dictating the trends at the moment. So yes, domestic measures are trying to give some bout of optimism, but then what I continue to feel is that unless the markets are able to push itself above, like for example Nifty above 25,000, Bank Nifty above 55,000, I will continue to hold on to a very subdued view. Yes, it's not a sell off at the moment. I would not say on the bearish tone, but then yes, every rally is being sold into, and largely it's driven by the FI. And if you look at the FI figures, they continue to use these rallies to sell. So right now, every rally is emerging as a sell opportunity. So I would wait for a close above 25,100 on the Nifty, a close above 55,000 on the Bank Nifty to get a measure of optimism here. Yes, I am. You can say. Uh, Having a there is a light at the end of the tunnel, but then I'm still waiting for more brightness out here because considering the way the market is churning right now, the volatility is actually very frustrating for many of the traders out there. Yes, the mid and small caps are moving in pockets. It's a stock specific scenario out there. So one has to be really picky about what kind of trades one is entering because the markets
Hmm.
are not obliging either to the bullish side or to the bearish side. So there is a probability of a trend that is about to emerge. So with considering that being the scenario, and I would say that we got to hang on, not give up. But then I see that not much downside. But then I would definitely wait and
Hmm.
wait for the closing to ensure I go on the upside.
Sure. Not much on the downside, but no meaningful upside as well. So, we can expect the markets to be sideways until we get a close above 25,000. No clear trend. That's what you're saying. But just about 2 minutes to go for the markets to open. Raja, any recommendations in this market?
Yeah, I would like to go with a buy in Nika because I find that Nika has been weathering the storm, and that's a buy which I would give at current level with a stop at 235 for a target towards 250. And the second stock I would like to buy on dips right now is Paytm. So with a buy at current levels and a stop at 1235 for a target towards 1280, 1290.
Okay, both stocks from the new age basket, Nykaa and Paytm. Just about a minute to go for the market to open. Want to understand anything that you like from the PSU banking lot. PSU banks did see some traction. Couple of days it ended higher by 1% or so, the PSU index per se. Uh, any thoughts on SBI, even on Canara Bank, since we have a query on it? Just thought we'll get that out of the way. Naveen wants to know uh, swing trade levels on a Canara Bank as well. So your
Yeah,
thoughts. But I
so
think we'll just Raja, we'll just come to it. 8 seconds left for the markets to open. Let's get that out of the way, and then we'll talk about these two banking counters.
sure.
First ticks are positive. 0.3% kind of gain on the index. 24,800. We are around that level. In terms of the mid cap index, that's also moving in tandem with the benchmarks as of now. As I mentioned yesterday, mid caps came off significantly from the day's high. But as of now, it seems that the bulls seem to be dominating really, and advanced decline ratio is extremely strong. But that's of course early days to really suggest if that will be the trend throughout the day. 3:1, that's the NSE advanced decline ratio. The breadth of the market has been fairly okay in recent past, but yesterday, what's worrying is that the breadth also turned in favor of declines. But right now, things are looking okay. Let's see whether we can really sustain. That's a big question because that's what's been happening. We start on a good note, but by the end of the day, everything kind of fizzles out. Nifty, by the way, is up now 80 points, so 24,815. But let's take a look at some of the other sectors, the important ones like FMCG and autos, if they are extending their gains. Just autos, in fact, are up somewhere around 1%. So yes, strength continues for the auto index. FMCG, some bit of selling pressure after a good up move. So just about marginally in the red. IT is in the green as of now. Yesterday, remember, IT also ended the day in the red. Metals in the green, pharma as well, slim gains, but nevertheless, it's trading in the positive zone. PSU banks as well, showing some strength, almost 0.5% up. Realty index up 0.5%. So it is looking like a fairly, broad-based gain at this point in time. But as I said, the big question whether we can really sustain those, that's something that one needs to watch out for. It's M&M that's taking the lead once again. Yesterday the stock was up somewhere around 5-6%. Today 1.5% up. I think it should have already hit its 52-week high, 3,550. That's a 52-week high. But we'll wait for the race to settle and see. It's above that 3,500 level. Yes, it did hit a new 52-week high of 3,552. So M&M continues to take the lead. Trent is a close second. That stock is up 1%. SBI Life is in the green. Remember yesterday, life insurance stocks ended the day in the red, on concerns of input tax credit and inverted duty structure. But they are trading in the green. There are a few brokerage notes, and HDFC Life has also come out and spoken about the impact of GST cut on them. So, life insurance stocks reacting to that. Reliance Industries is also giving support to the index. It's up almost 0.8%. Aisha Motors also in the green. Power Grid, Bajaj Auto, Infosys, HDFC Life, Bharti Airtel, ONGC. So, list of gainers seems to be long this morning, and that's something that is music to the ears, at least on a Friday morning. ITC, that's the top lagger, down 1%. Titan, Tata Consumer, Nestle. Some of these FMCG names are witnessing some bit of selling pressure. Cipla and Sun Pharma also in the red. Raja, we were talking about some of these banking names. We'll talk about individual auto and FMCG names as well, but tell us about SBI and Canara Bank in particular.
So, yes, all of us have pinned our hopes on the PSU banking, especially after the RBI policy. But then the way the banking has been moving right now, so overall the bank nifty has dipped into deep oversold levels. So the probability of a recovery is very much on the cards. But the way the markets are behaving right now, so we really need to see some kind of recovery yet. So now zooming down to State Bank, we find that State Bank has been making an attempt, and it has been trying to hold off and trying to stage a up move towards the 850 mark. But then the stock has been really struggling. So I feel that the stock could continue to move in a consolidation zone, and I would not be a buyer in either SBI or in Bank of Baroda, because even Bank of Baroda is in a similar state, and Bank of Baroda is seemingly much more weaker out here. And with the kind of outlook which is there in the PSU banking space, and I would say that we should continue to hold on and wait for more strength to be shown in the index before we start participating in them.
Hmm. Okay, that's the view on the PSU banking lot. But there's one stock that I want to get in your thoughts on before I come to life insurers. Sammaan Capital. It has appointed the ex-CFO of Suzlon, Himanshu Modi, as the deputy CEO. Want to see how the stock is really doing. It's down somewhere around 0.5%. We have a query as well on this stock from Satvika Ranganathan. Any levels that we'll be watching out for here?
Yeah, see, Sammaan Capital is the new name, but then what we have done earlier is not going to go away. So we have to be really careful here because the stock has not, really matured in giving us some kind of outlook out here. So I would say that yes, the stock is attempting to move higher. So you can say that the stock has definitely bottomed out. And if you look from a higher time frame perspective, yes, this is a good time to initiate a long in this stock, but be aware that a stop of around 120 would be a key level which I will watch out for, because at those juncture the optimism in the stock would give away. So it has got an upside towards
Hmm.
170 within the next 6 months.
Okay, levels of 170 within the next 6 months on a Sammaan Capital. But let's talk about the insurance names. Of course, they have been in focus. They really don't have clarity in terms of the input tax credit, and of course, they won't be getting the benefit of, the inverted duty structure as well. But the company, HDFC Life, has come out and said that they will be transitioning to the new tax regime from the 22nd. And of course, GST reforms are expected to drive penetration and growth as well. They are expecting less than 0.5% impact on embedded value from this change in GST rates. And over time, of course, it is going to spur demand, and it will be accretive to the value of new business as well. Morgan Stanley came out with a report on HDFC Life. They have an overweight call, target price is at 890 or so. And they've noted the fact that management has said that the impact on its embedded value will be kind of non-material. And the company is aspiring towards doubling its VNB in the next 4.5 years. They're also of the view that the reforms will overall drive higher penetration over time. But how would you really trade into some of these names, the likes of HDFC Life and SBI Life? Do you think there could be fair bit of volatility going forward because of this change?
Yeah, see, you use the word over time, and that's what I would say that one has to, take this GST reforms into, because it took 8 years for these GST reforms to come out, and within 8 hours we can't have a decision saying that this is going to be a game changer. Yes. The projection is in that manner, and the aim is in that manner, but then the repercussions will have to be digested, and the respective organizations who are going to get impacted, they are going to see how they have to factor it in, and what are the changes that are going to come in the system. So there is a whole set of sequence which has been open. So a new box of instructions, new box of regulations are going to seep in, and how that's going to impact the process, and how it's going to impact the bottom line, all that will unfold in the next few months, and that's when we can really take a call. Yes, we had a knee jerk reaction yesterday, but then I don't think that one has to quickly assess and take some action. So I would wait a while. Yes, I would track the sectors that have been impacted, and then I would, if you recall, last year we had the again a trigger in FMCG, but that also did not impact the FMCG much. And again this year, again we have got a trigger in FMCG. So now we got to see whether all these triggers are really going to boost up the FMCG sector, which has been beleaguered for a while. So all these stimulants which come in the market, we got to factor it in with a pinch of salt. And I would say that I would wait a while and see how they are going to plan out and then take action. So at the moment,
Hmm.
the insurance stocks, I would wait. I would not neither invest nor go short. I would see what really happens, and then I would take a call.
Okay, that's the view on insurance. So to say, wait and watch. That's the call. But let's focus in on our viewer queries. We couldn't really take their queries yesterday, so let's get them addressed today. Starting off with a query on Hero Motocorp from Debu K. Of course, we know two-wheeler pack has done phenomenally well last 6 months or so. Hero Motocorp as well, one of them. But now, given the kind of up move that most of them have seen, what is the call? Should one ride the momentum, or is it about to fizzle out? Are they topping out? Where are we in terms of where the two-wheeler stocks are headed, and particularly Hero Motocorp? How is it looking? It's still away from 52-week highs. Do you think it is headed towards that? Will it be a smooth ride?
Yeah, considering the Hero MotoCorp numbers and the auto sales, so the company has done fairly well in its ability to stage a strong up move, and I feel that this up move could come into a pause right now, and I would say any dip towards the region of around 5150 would be a good buying opportunity instead of entering at this level. Considering the extent of move, we can see almost a 1,000 plus points rise in from August lows, so where it was consolidating. So yes, this move has been quite sharp and near vertical rise. So if it's a near vertical rise, there is bound to be some profit booking. So I would wait, and with the festive scenario emerging right from Ganesh Chaturthi, so you can see that these sectors are going to be in play more often.
Hmm. Right, that's the view then on two-wheelers and Hero MotoCorp as well. But the next query I want to take up is on a Force Motors coming in from Ashish Parekh. He wants to know the short-term view on this stock. The stock has done phenomenally well in the last 6 months, but off late, it has kind of fizzled out, seeing some consolidation last 5 days. It has seen negative returns. Shorter term, how would you trade into this?
Yeah, yes, Force Motors definitely is attracting attention, and those who can enter at the price at which it is trading in, it definitely offers a good opportunity at the current juncture. Yes, it has come into some nice set of supports, and with the auto sector also in play, like we were discussing, I would say that this could be a good time to enter into the current price level. And yes, it is the possibility to test its highs around 21,000 is very much possible.
Hmm. Okay, that's the view. 21,000, very much possible on the charts. Hope that answers your query. Want to take up a query on CG Power as well. It's coming in from Nana Prakasam. Of course, the stock has seen good traction. It is also leading the semiconductor innovation in the country. Is it good to enter at these levels, or is it a buy on dips? And in terms of the next levels to watch, resistance levels, what would be the key level?
Yeah, considering the semiconductor space and also the recent event which has just happened on the Semicon 2025, so you can see that the thrust which India is giving to the semiconductor space is very much on the lines of the demand which is emerging, especially from the AI generation which we are in right now. So I would say that the stock is in the perfect place, and yes, the stock is definitely a multi-bagger from moves from the levels of around 65 where it was consolidating to its current levels of around 750. So the stock definitely offers us an opportunity. So one should look to participate in this counter at the current levels and on dips, because the stock after a reset from its highs is showing more upward traction. So one can buy at current levels, use dips towards 680 also to buy into. The stock has got more potential to go towards the level of 1050 within the next 6 months.
Okay, that's the view. That's the view from Raja on CG Power. Raja, there is a query that has come in on Zaggle as well, and this particular stock hasn't really been moving at all. uh, has been sideways last month, 5 days as well. And on a YTD basis, it has shed 28% or so, not had such a great year. Any thoughts here? Is it worth a look?
Yeah, looking at after its strong thrust post its IPO, the stock has not really been able to materialize anything this year. So yes, it is in a consolidation phase. So if you are holding the stock at the moment, there is no cause for exit. But then yes, also there is no cause for addition. So I would say hold on, and your exit criteria should be in the region of around 355.
Okay, that's the view. Hold is the call, and 355, that's a crucial level where you can look at an exit. That's about Zaggle, and we had a query on this from Anil. But moving on to the next one, coming in from Anune, wants to know your thoughts on 361 VAM and CAMS, whether these are good stocks or is it advisable to shift to a Bajaj Finance? Of course, Bajaj Finance, we've seen the traction yesterday, and the stock has also stands to benefit from the GST reforms, being the number one consumer finance company in the country. What are your thoughts? Should one shift to Bajaj Finance, or if they have positions, they should hold on to 361 VAM or CAMS?
Yeah, the recent stance which I'm taking and also observing is that the new age stocks seems to be performing much better, and they're able to handle the volatility for some certain reason which even I am not aware of. But then yes, they seem to be attracting traction, and I would say that 361 WAM has been able to weather the storm over the last few months. I would say that this is a good bet, and it could see some traction. And I would say that a move above 10 or 1100 would be a good opportunity to enter into the stock.
Hmm. Okay, that's the view. Hope that answers your query. There's a query that has come in from Alex. He wants your short-term view on a CESC. Looking at the stock, it's just about 0.5% up in the last five sessions, and even the last 1 month haven't been all that great. But at 155 around, how would you look at this particular counter?
Yeah, CSE has been waxing and waning similar to 361 WAM, so there is no cause for exit here. But then I would say that the power sector stocks are moving in random pockets. So at the current juncture, yes, power is a sector which has been patronized by the government and which is always going to be in demand. But then also with the current AI generation, which we are in, so we need to hold on. Yes, the stock has staged a solid comeback, and over the last 2 years, the stock has been very prolific. And yes, the current market situation demands us to be a little poised at the moment, looking at the nature of the market volatility. But then there is no call for exit here. One can hold on, and if one needs to add, the levels will be above 171.
Hmm. Okay, that's the view on CESC. Alex, hope that answers your query. Two more queries to go then. Raja, there's a query on L&T Finance. The stock has hit a fresh 52-week high today. It has been doing extremely well. Uh, is it worthwhile to chase the momentum? Uh, I think this query has come in from RG. I don't know the full name, but RG wants to know your thoughts.
Yeah, L&D Finance definitely amongst the finance names is amongst the marquee names is a very good stock. The stock has been showing sufficient upside, and over the last 2 to 3 months, where the markets were uncertain, this stock was pretty certain. And once it was able to cross its levels of around 185, which was almost all-time high, right? The last high of 185 was formed in 2017, and after that, it is now edged higher. So, which clearly says that there is a steady buying participation here. So, every dip in this stock is a buy opportunity. Yes, if you do not want to chase, then the buying levels will be at 210. But then I would not keep a stop loss in this stock. This stock is definitely worth a hold, and those who are looking to invest into this stock for a longer term, then this stock has got potential to move towards the region of 400 within the next 1 year.
Okay, that's a view on L&T Finance. Hope that answers your query. There's a query on Oberoi Realty coming in from Manish Kumar. How do you see this stock being poised within the real estate space? And if not this stock, any other stock that's worth a look within this pocket?
Yeah, Obra Realty is showing some profit booking right now, and the real estate space gets impacted if we don't see much traction in the bank nifty. So I closely associate the moves in real estate with the bank index as well. So right now, with the overall subdued momentum seen on the bank index, I would say that let's wait a while. And yes, the likes of Obera Realty or Loda, the mid-tier IT companies, sorry, the real estate companies are the one which I take a look at. So that's how I would like to proceed and take action. So be it Loda or be it Obera Realty, those two are quite fast-paced in action and also give a better return on your investment. So I would say that those are the two
Hmm.
names that should be tracked. But then again, Bank Nifty, I feel, is holding a very important cue for us in the coming sessions. So let's wait and
Hmm.
watch if Bank Nifty takes a lead here and also helps the associated indices as well as the Nifty to stage an up move.
All right, that's the view then. Hope that answers your query. But with that, we've come to the end of the query segment. Raja, I would like to thank you for taking our time and joining in. As always, have a great weekend, and I'll see you again, hopefully next week.
Yeah, thank you. Same to you.
Thank you. Thanks a lot. Well, that was Raja with the technicals and, of course, all your stock related queries. If we couldn't take up your queries, keep them coming in on our next show. We will try and get them addressed then. But before we get on board our next guest for today, let's just take a look at the texture of the market. We are still holding on to gains, but kind of cooled off slightly from the opening highs. 50 points up on the Nifty. We are below that 24,800 mark, around about that level right now. The mid cap index, however, has gained some strength. It's up now in excess of 0.5%. And the breadth is also looking pretty encouraging at this juncture, 2 is to 1. Uh, so nothing to complain as of now, but let's see whether we can sustain these gains. End the day in the positive zone. On a weekly basis, of course, we are poised to end the week, with gains on the Nifty. So let's hope that happens. But the Nifty Bank Index, as we speak, has slipped into the red. The Nifty FMCG pack also, cooling off a bit after yesterday's up move. Some bit of profit taking. Continuing there, in fact, taking place there, not continuing. Autos, by the way, are holding firm, another 1% uptick there. IT also showing some strength, up 0.5% or thereabouts. Metals also in the green. Pharma was among the laggards yesterday, 0.5% gains there. PHC banks doing well. Real estate also as a sector doing well in trade. M&M once again taking the lead, up 2%. Eternal is the other one that's up 1.5%. Some of the two-wheeler makers continue their up move, the likes of Eicher, and four-wheelers also doing well. Tata Motors, Maruti among Nifty gainers. Reliance Industries providing good support today, up almost 1% or so. So all in all, nothing to complain, just yet. Hopefully, we will sustain these gains in the second half and end the day and the week on a positive note. But let's bring on board our next guest for today. Joining me is Mayuresh Joshi, Head of Equity Research at William O'Neill India. Mayuresh, always a pleasure chatting with you, and more so if it's a Friday because we are heading into a weekend. Your thoughts about the GST reforms. How should one look at rejigging portfolios? Which are the top three sectors that you would look at? Let's make it very simple for our viewers first. Top three sectors after the GST reforms.
Morning, Nandita. Always a pleasure to be on your show as well. I think it's going to be a bottom-up story as far as consumption is concerned, and therefore I think FMCG as a sector, if you're asking the sectors, should continue showing decent amount of traction as we head into Q3 and thereon. Domestic apparel makers, in my opinion, should also continue doing well. The boost that you probably received in terms of the average selling price going from 1,000 to 2,500, that will boost a lot of domestic apparel companies, and with consumption expected to remain higher, I think that part of the market might remain very strong and steady. And the third sector might be the hotel space. Because my own sense,
Hmm.
again, is that both the rationalization happening as far as it comes to average room rates to 7,500 rupees, a decent amount of hotel rooms will probably come under that size, as well as rationalization in terms of restaurant billings itself will also mean that there will be some element of savings on the consumer end. So I think these three sectors, in my opinion, from a bottom-up consumption perspective, should probably
Hmm.
fare well as we head into Q3. And
So, would you be in the camp that believes that consumer staples would do well, or would you tilt towards consumer discretionary? Because there is a fair bit of inelasticity, in demand where staples are concerned. How would you, really look at this end of the consumption basket?
So when you're talking about discretionary, Nandita, I think a large part of the discretionary spending comes from rural and semi-urban area, which is almost 60% from rural and the rest divided majorly between semi-urban and urban as well. So I think these bottom-up stories that are reflecting in our O'Neill parameters are reflecting towards a bottom-up consumption boom that will happen because as discretionary spending improves from the lower and the middle strat, I think a large part of that spending will happen in these pockets. Obviously, I think the
Hmm.
structural drivers for consumer durables, including your AC makers, including your refrigerators, I think a segment of that market still continue doing well, including your high-end premium cars, as an example. And therefore, that part of the market might continue sustaining going forward. Do you see a significant amount of volume shift because of GST rationalizations on ACs, refrigerators? Obviously, there will be some element of delay because the rates kick in from September 22nd. A lot of managements probably believe that the delay in terms of purchases for even these durables that will happen might happen, but will it be something which will have a huge volume multiplier effect considering the other end of the consumption basket? I think the other end of the consumption basket will have a huge volume boom. Staples, durables will do well, but again, in my opinion, I think it will be a far more structural and a very, very calibrated moves that you'll probably see.
Hmm. Got your point. Talking about autos as well, since you mentioned high-end cars, also. But autos per se have also seen quite a sharp run up ever since the Prime Minister announced that these reforms may be coming. Do you think all of this GST or most of this GST related news is now in the price for some of these names like M&M because it continues to rally? How much more upside do you see from here? And for two-wheeler makers, do you think or would you prefer a Hero and Eicher over Bajaj Auto, given their exposure to above 350cc bikes? How are you looking at the entire space, four-wheelers and two-wheelers, in terms of valuations and the news flow?
You're right. I think a large part of it has now got gestated because I think the street was already having the hint in terms of what might actually happen, and that has actually got delivered. Now it will start playing on numbers, and therefore the street will now look forward on every passing month's auto number that probably comes through in terms of dispatches and sales, and the quarterly numbers in terms of the margin performance by these companies. Therefore, I think stocks like an M&M, Hyundai, TVS Motor between four-wheelers and two-wheelers is something that we continue holding in our local and global portfolios. As far as it comes to new launches and competition intensity, I think new launches will keep on coming through. The rationalization will have and a positive impact in terms of volumes. Input costs have generally started coming down, which is very, very supportive for margins. And therefore, earnings should have some element of a sustained uptick. To answer your question on Bajaj, Hero, Eicher, I think a large part of Eicher's portfolio, Nandita, almost 75-80% is below 350cc. So to that extent, they
Hmm.
don't get affected. However, I think there will be some element of the market. I was hearing Rajiv Bajaj yesterday. And therefore, I think even on the 350 plus cc, I think his take was that a large part of the market might actually start shifting from 350 to below 350 because of the rate move. And a lot of manufacturers will actually start doing that. Now, whether that happens or not is anybody's guess. But Hero has now introduced a 125cc. You saw yesterday a launch in terms of the EV platform that TVS Motor had. And therefore, I think these elements will keep on playing through for the industry as a whole. But generally, I think selectively, leadership auto stocks will continue doing well. We have a little bit of a bias, as I said, towards TVS, M&M, and Hyundai within the auto.
Hmm. Got your point. Again, another thing related to GST, that's insurance. Of course, a lot has been spoken about how they won't be getting the input tax credit and, no benefits of the inverted duty structure as well. what is the tactical call on players like SBI Life and HDFC Life? Although they have also, HDFC Life did come out with comments saying that, it will be non-material, the impact, 0.5% or thereabouts. But how would you play these stocks on a tactical basis?
I think the presumption was that it might actually be very, very positive for insurers. But at the end of the day, once I think the realization struck in that ITC benefits are not there, and therefore the cost of acquiring policies vis-a-vis the premiums against which these policies are getting acquired, I think it does not create an incremental benefit for the insurer companies. Obviously, I think the consumers like you and me benefit with that because our costs will go down as far as securing ourselves, both in terms of life and health is concerned. But from an insurer company perspective, I think it might be a little bit of a tad effect where I think there is no positive incremental benefits coming. In fact, I think the costs that they were probably offsetting because of the input tax, I think that goes off completely, which means that there is some element of confusion and fear on the street that premiums might actually start moving higher because of the cost structure that they've probably got on their P&Ls. So I think again, we've largely maintained a neutral stance on insurance companies. I think with these amendments, what comes through is anybody's guess. But the amendments at play, at least at this juncture, will largely mean revenue neutral for these companies, which means earnings should not have a exponential element of growth, making us making us believe that earnings should largely be very, very okayish for this sector and therefore maintaining a neutral call.
Hmm. Okay, that's the view. But let's shift focus to gold. I'm bringing your attention to gold because I was just checking the futures rate this morning. Gold prices had crossed 3,600 per ounce. And there's a Goldman Sachs report that said that expect gold to surge to $4,000 an ounce by mid 2026. And if the Fed's credibility gets significantly eroded, it sees gold nearing $5,000. I mean, let's talk about how one should really play this gold theme right now, in portfolios. Should gold loan companies or even companies like Titan, should that be definitely a part of portfolios now?
It really depends because I think if gold prices start moving higher, say assume scenario one, I think it creates an impact where I think gold purchases start coming off. For gold financiers, obviously with gold prices going higher, they've got the margin of safety as far as their loan to values are concerned, and therefore volume growth can start coming through in terms of more top-ups probably being given or extended LTVs that probably happen. And therefore that might reflect on numbers. The second scenario, if gold prices stabilize at the current juncture, and the assumption that for some reason or the other they start coming down, it has a positive impact on gold jewelers because I think the amount or grammage that you can probably buy with that limited amount of cash that you probably got, that starts going higher. You've seen so many jewelers that have probably mentioned that initially when gold prices were lower, people used to buy gold assuming grams. Now they come in terms of a fixed value और value में बोल देते हैं कि इतने ग्राम का जितना गोल्ड आएगा वो दे दीजिए चलो. Therefore, I think
Hmm.
it's an if and but story as far as gold prices are concerned. But generally, I think the street will probably look forward in terms of Trump's tariffs and what kind of an impact does that happen on global GDP and whether a lot of global economies, including the US economy, actually reel under some sort of a pressure because of these additional tariffs. Does consumption actually come off in the US and other markets as well? I think that is the big question to be answered. And if that probably something that the macro trends play out, the risk reward or the probability that weighs in
Hmm.
is that gold prices might actually head higher. We've already seen silver prices move significantly higher on expectations of a lot of multitude factors, including industrial demand, shortage of supply, so on and so forth. But I think scenario one is more likely getting pegged in with assumptions of global GDP and consumption slowing down.
Hmm. Got your point. I just want to talk about the overall mood in the market. We've had quite a few positive events, in terms of domestic factors, but the market has, mostly discounted some of them. Looks like the focus is external, when it comes to FII's uh,
Yeah.
consistent selling and, of course, no clarity on the tariff front yet, even though, a union minister Piyush Goyal has hinted that November could be the month when we could see a deal. But how or what do you think it will take for FIIs to really come back? Because domestically, quite a few positive headlines, but that didn't really seem to move the needle in terms of foreign flows. Any conversations that you may have had with your global clients? What is the sense you're getting? Are they waiting for some deal with US, or are they waiting for earnings to pick up? And which is that trigger that would get them back?
So earnings, Sakshi. I mean, sorry, Nandita. Very clearly. So I think what has happened, Nandita, is that earnings have come off over the last few quarters. And I think FIs are strong chasers of growth. Once they see earnings coming off, I think they probably come off from those markets. And India has precisely been that story over the last few quarters, where earnings had definitely slowed down. Now, with expectations of the rationalization that is happening with the government capex, you look at the numbers that have come out. Government capex has accelerated along with central and state capex as well. There is expectations of private capex also improving and exponentially expanding as we head into Q3. And therefore, I think a mix of consumption and capex, a combination of this, which might actually offset assumptions of the 25% additional tariff actually continuing. To that extent, I think the GDP degrowth that can happen gets offsetted. And therefore, I think in a global setup where the expectations of global slowdown might actually come through for a combination of factors, as I said, for Trump tariffs or consumption slowdown, either or. I think India as a story where consumption will pick up, where capex will pick up, and where earnings will start showing respite is one market that can stand out. Now, as earnings starts coming back from Q3 onwards, which is the hope for the markets and which I believe might actually play out and sustain going forward, the expectations of solid and sustained earnings growth is something that will get FIS back. Because I think India might be one of the few markets in the entire globe that might have the combination of inflation, which is still expected to remain lower, earnings and GDP growth expected to inch higher. So I think in a scenario where the globe probably might be slowing down, India might actually be faring better. And if that probably starts playing out, FIs will have no choice but to return. In my opinion, I think FIs will come back as we start getting into Q3 and earnings start coming.
So perhaps Q3 is when we can say or see FIIs really returning to the Indian markets. You mentioned private capex as a theme, but which are the pockets one should really focus on within the within the capex plays? Industrials, would you look at that?
Yes, I think industrials and specifically, I think domestic manufacturing, I think that is where a large bulk of the focus is. And that is where I think the capex is also expected to happen quite significantly. And therefore, I think across industrials, I think you've got specific capital equipment manufacturing companies, you've got wagon makers, you've got cement companies, you've got a few of the housing infra names. I think these are the spaces where I think the intensity or the capital intensity might actually sustain going forward. And therefore, I think these are the spaces within industrials that might continue doing well.
One last question. What is the tactical call on banks? I was just reading a CLSA report this morning on banks, wherein they say that September quarter is likely to be the worst quarter in recent times for banks because of the sequential NIM compression. And of course, there could be some asset quality pain in certain segments. And loan growth is also likely to be fairly subdued in the September quarter. Looking at a very short-term view for banks, would you advise sticking to the PSU names, or what should one really do in terms of banks in the very, very short term?
Short term, there is pain, no two ways about it, because I think September quarter will still be a reset quarter. I think what you've probably seen, Nandita, is that deposit growth with interest rates coming off and deposit rates have come off quite significantly. And therefore, I think the challenge for banks is deposit accretion and how do they manage their cost of funds. Obviously, I think the advances growth might continue because of GST rationalization. You might have durable, consumer durable loans. Which probably might improve government capex, as I said, private capex, which might actually have a good say. The other fear was NIM compression, which has played out largely. With a lag effect, I think the advances rate should also reset which means that NIM compressions to a large extent are behind us because I think a large part of that interest cut cycle is behind us as we speak. The third element is fears on asset quality deterioration. You've not seen any signs of that. But with any aggressive lending that happens, the fear on the street is that delinquencies might increase. Now, banks have been very, very selective in terms of the risk-weighted assets, as an example. NIM spreads should not compress further. I think a large part of that has already happened. Deposit lag is some element of a risk, but how that plays out is something to be seen. And therefore, I think from an immediate earnings perspective, I think immediate numbers might be very, very soft for a large part of the banking viewers. But I think from a supporting mechanism for the economy, I think banks will play a pivotal role. And therefore, you have to be a little bit more selective between the private and the public spaces as we speak. Select leadership stock within the bank stroke NBFCs, in my opinion, with a longer term view can continue to.
Hmm. Got your point, Mayuresh. With that, would like to thank you for taking our time and joining in as always. Lovely chatting with you, and have a great weekend. That's the best part about talking on Fridays. It gives you the feel of the weekend also when you wish your guests a happy weekend. I look forward to interacting again. Thanks a lot for joining in.
Thanks, Nandita. Always a pleasure being here.
Thank you. Well, then, that was Mayuresh Joshi with his take on the market and the sectors to really watch out for post the GST reforms. But let's take a look at what the markets are doing. We are where we were at when I last did the market check, around that 24,800 mark, just about 65 odd points higher on the Nifty. The mid cap index has picked up traction ever since we saw the markets opening in the green. It's up 0.7%. Bank Nifty, just about, clutching on to that positive zone, but no big moves on the Nifty Bank Index. Breadth is extremely strong, 2 is to 1 at the current juncture. In terms of sectors, autos, taking the lead, 1% higher on the Nifty Auto Index. However, FMCG has come under some bit of profit taking down almost a percent or so. All in all, things are okay, but some sectors, under profit taking, and let's see whether we can hold on to these gains or not. But of course, before I end the show, here is a message for our viewers introducing Money Control Super Pro, your ultimate investment superpower. Get live calls, trading and investment ideas from SEBI-registered experts, pre-identified chart patterns, and AI-powered stock alerts on WhatsApp to help you trade and invest with confidence. Super Pro, where serious investors stay ahead. Download the Money Control app and subscribe to Super Pro today itself.